This is Justin Pulitzer. This is my weekend review video for Sunday, October 23rd, 2016. It is, however, being filmed on the 22nd. That's Saturday. Anyhow, a good amount of stuff to cover. I'm going to touch briefly on the Fed. I'm going to get into the 7 market keys, talk about the major market indices, and then talk about a couple of momentum stocks. I'm going to try and make this video a little shorter than usual, so here's to hoping. Anyhow, the probability of a November rate hike is very low. I think that they're going to use the November meeting for signaling to let us know if December is on like Donkey Kong or if it's going to be a non-starter, another one of those kind of epic fails. So the probability came in a little bit, but we're still well over 60% here. So until this really starts receding below 50%, I think that the market is going to be a little bit on edge. In the Fed vernacular, there was a interesting bit of data. I don't know if this was picked up by too many people, but the New York Fed lowered their GDP estimates for both the third and the fourth quarters. So clearly the Fed hasn't reached their inflation expectations, their growth expectations, and we all know that the foreign risk is starting to pick up a bit. So I don't really understand why the Fed would be hiking other than to hike for the sake of hiking. They seem to be very concerned about their reputation, but I assure you, if they hike and they're wrong, their reputation is going to be all the people the pundits who say, oh, the Fed, they should be hiking to save their reputations, are going to be the first ones lined up to, stick the knives in when things go badly. So I think the Fed needs to be very cautious with their rate hiking for the sake of rate hiking. Anyhow, I've talked about the job quality. We're not going to have the carnival ride operators to fall back on, so I guess we're now in the hoping for mall Santas and elves, and see how that plays out. But the job quality isn't that great. There's not a lot of wage growth. The Fed really, in my view, should chill. Yellen gave a speech where she talked about running a hot economy. If she considers this hot, this is like the night of the living dead here. It's really a very sorry state of affairs. Anyhow, that being said, who knows what they're going to do? They hiked last December, so I think it's a very possible they will hike, but they should not be hiking. Anyhow, let's get into it here. The VIX here is starting to make some higher lows with some lower highs. So this is clearly going to bounce around for a while. This compression of volatility usually will lead to an expansion of volatility, and unfortunately for the market, the expansion will likely be higher just because the VIX is at the range lows, and it kind of is what it is. So I'm keeping an eye on the higher lows thing. I remember I mentioned it here, and we all know what that led to. So I'm not saying that that's going to happen. I think that we're going to be in a period of fairly benign volatility with maybe some momentary spikes like these. I don't know if we're going to get flash crashes, but I am expecting this to kind of bounce around for a little while, and I'm curious to see if it continues the trend of higher lows. As long as that happens, I think the market is going to be on edge a bit. If that starts making lower lows or just kind of revisits these lows, that will augur well for higher equity prices. The biggest thorn in the side of the bulls, and I know that this is going to sound crazy, it's a bit of a circular reference, but I assure you this is really how it is. The dollar is the big problem. We had this really big run up in 14 and early 15. It is consolidated here with kind of a look above and fail with a lower high, and then kind of some look belows and fail, and we were in a bit of a downtrend, but the dollar now has broken out of the downtrend, and it is in an uptrend. We are at the channel high here. I left this oval in. We have kind of achieved price target. Let me see if I could zoom in. I apologize in advance. There were some changes in the platform, and it's been a really big pain in the ass with regard to charting. But what you can see, we're getting into these reference highs and the range high, and keep in mind we're really coming up from the bottom. I don't know that we're going to just tear through these highs, but the higher this dollar goes, and you can see we consolidated and now it's sort of trying to break out, this is getting a little steep. the higher the dollar goes, the worse it is for the stock market. My thoughts on that are this: as the dollar rises, traders are going to get fearful that the Fed is going to hike. However, the very fact that the dollar is rising is going to make the Fed worry about hiking, because rate hikes would further exacerbate this. That will hurt earnings, which would slow the economy still further and not be good for the economy. I think the Fed has really adopted the kind of the Hippocratic Oath to do no harm, and they would be squarely, the blame would be squarely on their shoulders. So the dollar has run a lot. It could go a little bit further, but I do think it's going to cool off in a little bit just because it's moved so far so fast. So I think that the risk here is could potentially a little higher short term, but could back off a bit. But look, higher lows, higher highs. The pattern is clearly changed to be more bullish. If this were to kind of chill out a little, chillax a bit, I think that would be good for the S&P. If this continues up, it isn't going to be good. The market doesn't like these types of shocks. When this moves far and fast, it will start crushing earnings. You're going to start hearing that on earnings calls. We're a little bit overbought on the stochastics. This is getting into overbought territory, oversold territory. So we'll see. A pullback in the dollar, though, would be good for stocks. A continued rally will not be. The bonds, that really is the measure of the Fed, have been in a bit of a gentle pullback. We're still in an overall bull up channel and an up channel within the up channel. So it's hard to say that we're in kind of danger zone territory. We've just been kind of playing footsie with the lower end here in the 200 MA. If this were to kind of fall out of bed here, I don't know how far out of bed we'd fall. Maybe to this sort of lower channel low here, which is these reference lows, and you have a 61.8, 125s, 126s. So I think that if this came down here, that would be the area to kind of BTD, buy the dip. And then maybe it would set up for something like a head and shoulders. Like, you have the left shoulder here, the head up here, and then, the neckline, and then it bounces back up, probably close to the 135s, or maybe even, 132s, and then maybe would roll over. But I don't think that this is just going to fall out of bed completely. And keep in mind, as rates rise, that's kind of doing the Fed's work for it. A couple of things that I'm seeing, I don't want to get too into financials, but in order for there to be real panic and to have a big problem in the markets, you need a credit crisis. Something that looks like this, or, beginning. This was the decline in oil and the fear that all oil companies were going to go bankrupt. Oil is rather high right now, and I'll get into that in a bit, but we're above the 50 MA. We're basically, HYG is bumping its head up against the 61.8 retrace of this entire decline. It got close here, backed off a bit, and now kind of retesting that you could see this edge of this volume distribution. So if this can kind of punch through, I think things are going to be good. I mean, this is clearly a V bottom, and it's just coasting. You really need to see this really in some more severe decline to start getting nervous about a more major correction. The 200 MA, which had been downsloping for a while here, is clearly bent back up. It is broken out, retested. We may be in the mood to retest it again at some point, but all the major moving averages are upward tilting, which is always a sign of a bull market. And this is young, right? I mean, it's kind of just turning. So, I mean, as long as we're above these major moving averages, I'm not going to be thinking, credit crisis just yet. So, as long as this kind of holds, the 50 and the 100, which is, above this last swing low, as long as we're making higher lows with some higher highs, to me it's okay. If we start breaking down and making, lower highs and lower lows, then we will reassess the situation. But, for that big bear market type of thing to happen, your credit will not be holding up well. It would be contracting quite a bit. And real contractions in the stock market, like big bear markets, usually are fueled by a credit crisis, a liquidity crunch. Speak of the devil, oil. I guess I could get rid of this. This was sort of the, maybe I'll leave it for now. It was the old uptrend line, which had been breached, kind of retested, and we've been struggling to get back above it. But we have a bit of an inverse head and shoulders here. Higher lows, higher highs. This was a bit of a look above and fail day, and now we're kind of coming back down, basically hanging out around the 10-day. I'm going to keep it real simple for you, folks. This day's range here, it's also the basically the range of the move, right? This was the old high. This kind of looked up, came back, and now we kind of punched through but came back. So as long as oil goes above 51.60, I think that the next move would be up to 54s and 56s. If we were to lose the low here of like 49.15 and the 20, then I think we're going to have a 50 MA test around the 47s and 46 area. That's sort of where this next range of congestion is. You can see there's a big volume node down here. I think going into the OPEC meeting, where they're supposed to be cutting, the risk here could be to the upside. We are, getting into a little bit of overbought. The money flow is starting to, I think the easy money is starting to come out. Firms are probably putting on some hedges. We know the Baker Hughes rig count has been increasing. So I am thinking that there's either a play here, like I said, above 51.60 for a move to the upside, or a right or right out short below these lows in the 49s for a play down to the 46s, 47s. But I'm thinking probably the risk is up right now in oil. Yeah. So XLE, kind of a this kind of to me looks like an accumulation channel. You had the lows, and now we're kind of just like bobbing around in this range, probably for a move, I would think, upward. Again, over all the major moving averages, the 200 MA is again sloping back up. That's very key. And we haven't really had a retest of the 200. The ideal scenario for me would be for this to move up to the channel low, this to come down, and then right or right out with a 200 MA support. I mean, it doesn't get any better than that. My way of keep in mind, this was where the real breakdown was, so it just seems like we're going to kind of consolidate a bit. I don't think we're just going to kind of tear, but I do think that this is probably a range-bound trade. So we got up to the upper end of it. It's backing off a bit. I would think maybe we could get down to the mid-channel. Holding the 50 and the 100 I think is okay, but if you lose those two, you can play for a row trade down to the 200. But as long as we're really above here, I'm thinking it's probably could even just ride the channel to the upside. My favorite of the oils are the big integrateds, the ones where you don't really have to worry about dividend cuts, and that's the Exxons and the Chevrons. And I know there's been a lot of, talk about them cutting dividends. I would be very surprised if that were to be the case. I had put out some short puts here. I kind of bought them back into this move, and I started putting them out again a little bit. I think it was actually Friday. I sold, I forget how many DTE, but it was like 82 basically for these lows. Because if this does come back down, I think that the 81 area to 83 area, there's a lot of muscle memory there. And I like that this broke the downtrend. I like that we're holding the 200 MA. Again, a bit of a look above and fail, but look at the back off. The 200 is right here. So it seems to me, and the 50 is like right here. It's starting to kind of bend back up. I think at some point Exxon's going to be a $100 stock again. I just don't know when. So I'm thinking a little bit longer term with this, but I do like it on the dips. China, very, very key market. I have this drawn in here. I think that this was this kind of high here that I've kept on for a while. I know a lot of technicians update their levels, and I do to some degree, but I also like to keep ones on that I know are important. And keep this in mind. I mean, I take a little bit of criticism for this from some people, but take a look here. I mean, when we broke down here, this was basically where you couldn't get back over. Look at this, a look above and fail, look above and fail. I mean, we're basically coasting around this area. So we're into some reference areas. My thinking is that this is going to consolidate for a while. You can see we've had these. I'm hoping. I was actually hoping this was going to come down a little bit more sharply. We're basically around the 50 MA, I think a little below. 100 MA and the 200 are both now, again, bending back up. I'd love this as a row long against the channel low in the 100 MA. I mean, I'm okay with a little bit of a punch low as long as the channel holds. But this seems to be consolidating. You don't necessarily really need China in ramp mode. You just can't have one of these. If this starts happening, that also, by the way, will spook the Fed and pretty much assure no rate hike. But these guys are devaluing like crazy. And I still think China is in a BTD, meaning buy the dip mode. These are poor highs. They've backed off. We're making higher lows with higher highs. So until that pattern changes or until this channel snaps, clearly I'm in a buy the dip mode with this. BABA, I had played long, actually above here for the move up. I'm mostly out of that position. I still have a couple of short puts on from I had done a risk reversal call spread, just fancy way of saying I bought a call spread and sold some puts to finance it. I took some off on Friday just because they had been so badly creamed. Why sit in the weekend risk there? But I'll tell you this: you had these the 10-day is starting to slope back down. 50 MA is held, so I'm thinking that if you can, this is really just chop and consolidation. They had such a great quarter. I'm hoping that this does actually come down into the quarter, down into these levels, to kind of reload a bit. But I'm noticing some lower highs here. Struggling to be over the 10-day. This was a bit of a look at below and fail on Friday. I was actually hoping for another 50 MA test to kind of really see, but it's just holding in. So for the most part, I'm not in. I mean, like I said, I still have some short puts, but I don't have the trade really the big play on in Bob anymore, and I'm looking to kind of reload on a dip. But, below the channel high, this could come back and see the mid channel here near these lows. And then that would maybe interest me for a bounce play maybe on their earnings. So, I'm sort of just waiting to see what goes on with BABA ahead of the number. There's a lot of days left. I think that weakness ahead of the quarter would shake out a lot of these kind of tag-alongs and maybe set up for a move back to the upside because the cloud seems to be going well, and I think BABA is really going to be building out in that degree. IBB did what we thought. We came back in. We got the 61.8 touch. Can I zoom in a little more here? Oh, this just goes so much. So you have this kind of move back up. So you have 1, 2, 3, 4 days of consolidation. I like either long above the 4-day high, which was 268.30. Is that right? 268.38. 267.01. But look at this. The 200 for the most part was holding. Now we broke it. You got to get back up above the 200 MA in my view. Anything below there to me is iffy. I mean, look at this. This was sort of the backside of the old downtrend line. It held here. It basically held here. Now we're below it. I'm thinking it's going to be resistance. Below this big kind of reversal candle, the up channel, it snapped and we're now back lower. So this to me just looks messy. I think it's going to be messy until the end of the election. But if you're looking for a right or right out trade below these 4-day low for short, or above the 4-day high for a move, for a little bit of a move back up. Alchemy is one I've liked for a long time. I talked about this getting back into this gap fill. It really took a long time, and I'll tell you, it definitely tried us. I talked about taking profits up in here. I'm still short some puts. I actually reloaded more down here. It's been, this was starting to get me a little bit nervous. I was actually looking to really get back in a big way down here in the 39s and 40s. But I'd rather have, I say, a partial position on. This is up huge. I talked about selling at 60.42 in the after hours. It actually, I think, got even higher into the 63s. I'd have to, let me take a look. Style, intraday, 1 day, 5 minute. let's do 2 days. Sorry, 2 days. I don't know. I think 15-minute is okay. Yeah, I mean, look, this thing got up. This thing really overshot to like the 66s, and then kind of backed off. So this 54-ish is going to be key to hold. But the trade here, let's go into a longer time frame. The trade here to me is coming to an end. This has come up really a lot. This technically is a major professional gap. It was on some news, but look where the kind of this breakdown was. You can use this range now, in my view, as a guide. Anything below 54.80 to 54.54. This may want to fill in some of the gap. I don't think it's going to fill it all in, but it could come back a bit into maybe the 49s. But if we could get back above this here, the 59.40, this could go back, significantly more higher to retest, maybe those after-hour 66s. The best thing in my view that this could do now is kind of chop sideways for a few days and then kind of take the high. That to me would be a little bit more sustainable. The S&P 500. Alrighty, let's zoom in here. How annoying is this? I apologize in advance. I have a lot of lines on this chart. I do actually use this. I'm going to keep it really, really simple. The 50 MA has been a lot of resistance. We have not been able to get above it. As long as we are below the 50 MA, the market is still vulnerable. As long as we are below the 100 MA, which is also now this kind of channel, this downtrend line, the market remains still vulnerable. We've had a few attempts now to break this channel low. Here we actually succeeded, but got back up, again back below, and then back up. This day's range, this high to me is the key. This was the kind of big look below and fail. Acceptance into the body of this bar, or a break of the low. You can see here the range low, the body low and this bar's low were basically the same. If you start losing, I don't even think you need to wait and use this bar anymore. If you lose this range low, the 212.17-ish, the market I think is going to go a lot lower, maybe to 109s, maybe even to the 106s, to 105s, 106s to retest the 200 MA. That would roughly be in line with the Brexit move. And you can see where this kind of basically held was roughly around where these, this was the move before. This was Brexit. These 2 days, this was the Brexit break. And then it came back up. It turned out to be just a big liquidation break. By all rights and measures, this was a lower high. This was a lower low. The market should have been dead to rights, and it didn't. It came back up pretty strongly. You have a bit of a mini kind of head and shoulders here, more of like a bit of a rounded top. I'm just amazed that the bears have not been able to kind of sink their teeth in. I've said for the last couple of weeks that I've, as long as we're below the 50 MA, I've been sort of a little bit more concerned about the downside. And they've been doing a terrible job of the market is pulling back, but the pullback it's a terrible job of doing so. So until you take out this low, the body and this low, I think things are kind of just going to be more of the same. This is the channel. We're kind of like holding on by our fingernails. I'm going to say the same thing. Maybe we do get a 50 MA test, but until we can clear the 50 MA, I still think things are iffy, and they're going to remain iffy and choppy. That's just is what it is. The good news is that the longer this takes, the 200 is coming up closer and closer, and maybe the break is less severe. That's all I can say. I've said for a while that if we do break this range definitively, you can basically double up the range, and that would basically take you down to an equivalent of a Brexit move and a kind of a mini head and shoulders breakdown into like the 205s. At the time, the 200 MA had been down there. And you have the 61.8 of the entire range roughly around that area. So I'm thinking that would be, if you do lose the 210s, 211s, that would be this could be a speed bump down, and then maybe one more still lower. A lot of this again is going to depend on the dollar and the Fed. If the dollar kind of chillaxes, as I put it, I think we can come back up and fill up this gap up here. If the dollar keeps ramping, I'm going to tell you that the market is not going to like that. 50 MA is the key for true repair here. IWM doing everything kind of okay, technically. You have a kind of a double bottom here. You've had a consolidation here, still holding the 100 MA and the channel low. Let me see if I could zoom in. Doing a little bit of a better job of it here. Let's tighten this up a bit. Same kind of spiel. Below the 50 is a little bit vulnerable, but I do like that we're holding the 100. 1, 2, 3, 4, 5, 6, 7 days of consolidation here. Double bottoms, channel low, and 100 MA. Let's keep it simple. Anything below 119.90, 119.88 is a short, probably to the 117.37, and maybe even a little bit lower to the channel low. You can see we're potentially transitioning from an up channel into a down channel. It doesn't have to go, though. If this comes back up, you can just wipe this down channel away. I'm just showing where it could go. But if you lose these lows, Friday's low, and this low, I think we are going to come down and retest the channel low, and then you're now with lower highs and basically a double bottom break to the downside. And then I think we would be transitioning more into a pullback. So this range is very key. If we can get back up above the 10-day and like this the 122s, it could be back up to the upside. You can see the old high here was 120.58, and we're holding on here. The market, has had every reason to break down. It hasn't. If it does, we know where we're going, and if it holds and we come back up, I think it's going to just be more of this kind of slow grind to the upside. Maybe we could rotate back to a channel high. As crazy as that sounds, it's still very possible. One of the things that has had me on, I don't want to say bull watch, but one of the things that has kept me from being more bearish than I think most people are is the relative strength in the NASDAQ 100, the Qs. That's your big names. Microsoft, in case anyone hasn't noticed, is above the 2000 .com bubble high. That's not exactly a bear market. And Friday made a higher low. We're making higher lows. And now has punched out of, this isn't even really even a downtrend. But we did close. I mean, if you do technically take these highs and you connect them, we closed above it. And above the the last couple days. I mean, this is a higher hammer low, and we're above the 20. I mean, it's very hard to get bearish on the market when you have big cap tech stocks like Microsoft's and Google's and so on and so forth at these record highs. So keep an eye on the NASDAQ. As long as we're kind of holding strong here, that is going, in my view, going to hold the market up. If we start breaking down and making some lower lows, we still haven't made a higher high here. So keep that in mind. 118.41 here is important. But I mean, as long as NASDAQ is holding, I think it's going to be it's hard for the bears to get a foothold. The aforementioned Microsoft, this was kind of a gap and consolidate. Let's go on a 20-year chart, monthly maybe. Look, we're at the .com high. I've been saying for a while I thought we would revisit this level. So where to now in Microsoft? 9 months. Let's do 3 years just to keep it consistent. If you take this high to this low and you project a 1.618 Fibonacci extension, it takes you up to 62s. So we may go a little, maybe even punch higher. There's a channel I've drawn in for a while. So we could be rotating up higher. You need to clear the 60-45 pivot. This is, a gap above a long consolidation. So this is really not overbought. I know a lot of people think so, but it's not. This was a kind of a breakout and not even really a major breakout. This is a very significant day. Anything above 60.45 I think will continue higher. If you get below the low, the 59.49, this could come down and fill the gap, but we'll see. This may just consolidate a bit. Again, like I said, a lot of people, I'm sure, I'm not the only one who sees this. I've seen a lot of people talking about it. I'm sure there are people who've been long for a while and are booking profits. And look, we came up from the low, came up from the bottom, and got there. There should be sellers here. It would be very healthy for this to chop and consolidate and then go. Again, you know what I always say, like 2, 3, 4 days, 5 days, and then go. That's always the better play. Apple. Just chopping, consolidating. You know what I love. You know what I like. With regard to Apple, I like shake and bake situations for earnings. You have a 50 MA that is roughly at the channel low. The ideal scenario would be a move back down to the channel low, maybe these reference lows, and then this could set up for a pop, again, still higher. You're coming into the edge of a volume distribution. It does not surprise me that there's a little bit of selling. I mean, we have come up from the bottom. This looks like this is looking like a bit of a W to me, and kind of a bit of a retest. Wouldn't be a bad thing. I think we're waiting for the earnings. If this continues to rally ahead of the number, it could be a pop that sells the news, or even a drop. If this sells off ahead of the number, then I think it's the shake and bake scenario. I'm hoping that happens so that we get a boost in the IV to sell the out of the money puts, maybe the 105s, or if it gets juicy enough, maybe even like the 102s. That's sort of what I'm thinking. There's a gap fill here to 105. So I think same week as the earnings, if this does come down and there's some IV, you have 100 MA there, a gap fill. I think that area would show some love. Facebook is breaking out ahead of the number. This will probably run now into the quarter, which is nice. You could always use that to book some profits. I will caution those that we have some defined resistances up here, albeit that they are significantly higher. Actually, I like the 3-year chart better. I think we're just going to stick on that for a while. I have a progression line that I've drawn in. We used to spend a lot more time on the wrong side of it. Now it is very defined that it moves above it are non-sustainable. You can see here they've been almost to the penny. So yeah, we could rally a little higher into the progression line area. If that does happen, my advice would be to book some profits. That is just my thinking, and this chart is driving me bananas. All right, so new all-time high. Can't think bearish as long as the 100 MA holds. We're kind of golden. I'm thinking that this will probably rally ahead of the number. If this were to do something like pull back, and my favorite setup with Facebook are gap fills ahead of earnings or tests of the trend line. I had tweeted about this in real time about buying this area or selling some puts. I did it, and it worked. I'm hoping lightning strikes twice, although I'm being a little less hopeful. I know people are buying these now into the quarters because Netflix blew out the doors and Microsoft did well. Often what you'll have is the first few that do that, and then the next few get bought up so heavily into the numbers that they wind up being sell the news events. But as long as we are above the range, I'm thinking progression line test. If this backs off, it could be a look above and fail, and maybe we could get some panic, some genuine panic ahead of the quarter. That would be really the ideal scenario. I'm still long, of course, some Facebook, but I trade it. I like to sell high and then kind of buy back when you get moves like this. It always seems to give you those types of opportunities. Longer term, I think Facebook considerably higher, but I am mindful that it is running quite a bit. Amazon, I talked about this being a sell at the 1.618. I said that it is also possible that there is a little bit of an overshoot to 885 if you do a projected measured move here. This is 411 points and 19 cents. If you project that off here, that would be 885. I said anywhere in here was an area to sell, and then I'm kind of saying that it's chasing, and I want to disavow the long knowledge. I had been bullish, and here is where I started saying it's time to book the profits. 50 MA has held several times. As long as the 50 MA holds, the risk is probably still to the upside. If it breaks, it may be more to the downside. Keep in mind, after this big epic run, there was a $222.44 sell-off. If you were to have something similar, comparable happen, that could be a retest of the breakout down in the sixes. It would also be a 200-day MA. I mean, this is how far this thing has moved. So I don't know if I don't know if this is going to be one of those big 100-point or 200-point gaps. It seems unlikely to me. I do think that we could retest the kind of the range low in the breakout, though, easily. The ideal scenario, again, would be for this to pull back ahead of the earnings, which are coming up on 10/27, so not a lot of time for that. If they rally this into the number, I mean, at some point you've got to say you caught the easy money. I think the easy money now has, for the most part, been made. Maybe they do a stock split, and this thing goes to like 900 or 1,000. But as far as technicals go, it's reaching price targets. My setup for this would be, the ideal would be a larger pullback ahead of the quarter, and then you'd probably get some kind of a relief rally on the number. Maybe it makes a lower high and then could potentially sell off. We're a long way from trend. It's been a long time since we've retested it. It would, Amazon does go through longer periods of consolidation and correction. It would make a lot of sense to me that would happen. So as far as to make a long story short, I think rallies in Amazon from here on in, though, are sales. I still like buying the dip lower, but I don't want to chase. Netflix, we're coming up from the bottom. This seems to me like it's a little bit too close at this point from the old time highs not to at least get close or to test. I know a lot of people have been messaging me about wanting to short Netflix. This is a professional gap. We had a bit of a look up here. It came down a lot. 50 MA hold. I talked about this being a buy. This has now gone beyond where I had been targeting. I thought that this would probably see somewhere up here into the 115s to 120s, and it is just really continued. I thought that this would have more consolidation, maybe a little bit of back and fill, but we are moving. It seems, like I said, we're getting kind of close into here. We're into 1, 2, 3, 4 days. Maybe we get another biggie, and then it, to me, will probably be a good opportunity to sell. This could run the highs. I think that this could easily see a little bit higher into the channel high and really squeeze it, ring out the shorts. But like I said, we've come up from the bottom and coming to the top of the range. I think there'll be some sellers here. Maybe it runs it a little bit initially, but Netflix to me seems like the easier money is starting to have been made and start looking to sell, I think, at the range high. Google. This has been doing what I thought. It consolidated. It's sort of breaking out. I think that this could see the channel high and 895.44, which is the 1.618 Fibonacci extension of this range projected higher. Love when I see things like this. I don't love that Google is running harder ahead of the number, but I'm thinking it could do one of these where it ran up, gapped up to the channel high and then pull back. So I still, as of right now, I'm thinking it's going to see the 895. It's held the 50 MA quite a few times. I would love if this pulled back ahead of the earnings, but I don't know that we're going to get that, so I am targeting that upper part of the channel. If this were to come down, obviously we'd be looking at some of the fibs, the corrective fibs, probably the 50 and the 61.8. And then there's a gap fill. So I'm thinking higher. Seems to me like this traded like this. It's breaking up. I'm thinking 895s with the Google. PayPal is actually one of my biggest holdings. I'm glad that it's doing well. It certainly took a while. We've cleared the 41s. We cleared the 42.89, which was the after hours pop high on, I think it were these earnings actually. Was it here? Then it had the pullback, or maybe I forget which earnings it was. It was one of maybe it was this one. It had gotten higher and then it kind of sold off, but where are we going now? If you do a Fibonacci extension off 46s and you're getting close up to the channel high, clearly a professional gap. This is almost a Maribozo candle, which just means you open on the low and close on the dead high. This finished just off. There's a baby little wick there, but kind of close enough for government work. I'm thinking any buybacks into this bar now. I like selling the out of the money puts of 41 or below. That should now be the support. I think anything moved into about halfway of this bar is probably buyable. The ideal scenario would be a few days of consolidation and then go, but this to me seems like it's going higher. I'm still long PayPal, and I like it for BTD. TWLO, not one of my favorite stocks. We do have a number to trade off of, though. This has a 61.8 here. This has a low here in the 37s. I actually like selling out of the money puts in this. Near dated, same week. They did a secondary. The secondary number was $40. The low of this day was 40.19. I think you can be long against $40 for a bounce. If you lose 40, it is a get the F out situation. The bounce to me would probably be to the 50 MA, maybe back to 56s. So I am sanctioning that now against a $40 stop. Skechers, pretty ugly. Gap down, consolidate, another gap down, consolidate. This thing seems like it might be steaming for the $15 to $16 range. I would be an interested buyer down there, but this thing is just not acting well. I had been short some puts. I bought some back because it didn't do anything here. My play was for a run before the earnings, and that really didn't happen, and I just booked some profits, and I'm waiting to kind of load up a little bit lower. This is now pretty cheap. A lot of the reason for the decline, I think, was foreign currency, and I don't know. I think they're trading. It was 13 times earnings before. I'd have to check, but this thing in the low double digits or high single digits to me would be a buy a little lower. This could be even a private equity takeout at some point. Expedia is my favorite travel stock. Everyone talks Priceline, but I'm an Expedia kind of guy. I think it's a much better product, service. We got the gap fill. Responsive selling. The next day was bought back up. Higher lows, higher highs. We are, however, coming into a channel high, and we've come up from the bottom. So if this gets the channel high ahead of the number, it might be a good opportunity to book some profits. If this were to come back in, maybe somewhere between the breakout of the 118s and the 50 MA to the 114, I'd be interested in selling out of the money puts, because I do think that this pattern is sort of starting to change. Anyhow, that's my story. I'm sticking to it. If you're not following me on Twitter, my handle is @JustinPulitzer. If you like this video, hit the thumbs up. Please leave me some comments. Your comments help me make the videos better. And be so sure to hit the subscribe button to my channel. You get notifications. There's also like a little box with a plus with a bell that you'll get notifications when new videos are posted. Anyhow, that's my story. I'm sticking to it. Let's have a great rest of our weekend, and cheers.